Hello, everybody, and welcome to the latest Let's Talk podcast. I'm delighted today to be joined by Nick Gloyn from Advantedge Commercial Finance, a specialist in cash flow finance. Nick's had a whole career in financial services since the early 2000s, working for high street banks and specialist lenders, and more recently, he's become regional sales director with a specific invoice and asset finance provider based in the southwest of England. Nick is a consummate professional, knows his product area very, very well, and I'm sure today will give us all an insight into the very basic instructions that we need to understand invoice finance and cash flow finance. So good morning, Nick.
Morning, Dave. How are you doing?
We're fine, thank you. Thanks for joining us today. I know everybody that watches the podcast would appreciate it. So one of the questions I think that most people would like answered, Nick, is that factoring and invoice discounting is used for multiple purposes. Are you able to cover off the main reasons why people and businesses look to use these type of funding?
Yeah, well, the main reason, I guess, number one reason would be for cash flow, to raise cash flow support. There can be multiple reasons why people need to raise cash flow. We look after businesses that do business with other businesses. So there generally will be a payment term or a credit term. You'll give your client a certain amount of time to pay for the services that you've delivered or the product that you've delivered. That can range from 30 days to 60 days to 90 days in some cases. So you raise that invoice and then you have to wait to get paid. But during that time, you've still got your costs, you've still got staff costs, you've got production costs, you've got stock that you may need to buy, your overheads that you need to fund. So essentially what we do with invoice finance is that we can release up to 90% of the value of your invoice within 24 hours of you raising it. And then when your clients pay 30, 60 or 90 days later, you get the remaining 10% paid into your account. So there are also maybe unexpected bills that can come up, which can cause cash flow issues. There are changes in supplier terms. You may start working with new clients who ask for longer payment terms. There can be HMRC that comes, bills that come due. There can be multiple reasons why you need cash flow support. So invoice finance helps with that. Growth is another reason. A lot of businesses that we work with are experiencing quite fast growth. And so a lot of challenges with that is that you're putting out a lot of invoices, you're waiting for things to get paid. You may have increasing overheads, so you have to recruit more staff, you have to buy more raw materials, purchase more stock. So we work a lot with growth businesses as well. Startups, increasingly we're doing more stuff with startups. As you know, Dave, it can be very difficult for startup businesses to get funding without a track record or without financials to produce to a bank. So we can help immediately with the first invoices that they raise. Yeah, and really any sort of unexpected costs or cash flow needs that a business may require.
Thanks, Nick. It's a good comprehensive answer that I'm sure most people will sort of understand and work with. But I think sometimes from the perception of businesses can be that, oh, invoice finance isn't available in my sector, in the area in which I do business. Can you cover off some of the common areas in the common business areas and sectors that use invoice finance on a regular basis?
Yeah, well, really, anyone that's given somebody credit terms and it's business to business, and you have to wait a certain amount of time for your money back, we can help. Traditionally, some of the industries that we work in are recruitment, especially temporary recruitment, where you're actually paying the staff, so you're waiting to get paid and you have to pay them direct from your own cash flow. We do quite a bit with haulage, couriers, logistics, which obviously over the last 12 months has been quite a growth area. Engineering, manufacturing, we're increasingly doing some bits and pieces with technology companies. We can do some construction depending on how contractual the debt is, but there are specific construction invoice finance providers that can help with that as well.
Okay, so it's fair to say if you're a business that deals with other businesses and you have a debtor book which you're waiting to be paid upon, invoice finance and factoring can often be the solution for you.
It's definitely worth a look, yeah, and it shouldn't be counted out immediately. And, you know, it can be a good way to raise the business because, you know, I consider it a type of asset finance, really. So You've got, your vehicles, you've got your property that you can raise finance against. You've got your equipment and other things that you can raise finance against. But often the debtor book is an asset on the balance sheet that people don't think they can raise finance against. So it can be a very good way of raising cash quickly for a business who's got an existing debtor book.
Brilliant, thank you. So obviously over the last 12 months, lending across all sectors has changed dramatically.
Yeah.
And it's indeed been the case for every funder. So can you give us an insight on how cash flow funders like yourselves at Advantedge have adapted to these very difficult and challenging circumstances that we've been put in?
Yeah, difficult, challenging, that's the word. I mean, unprecedented, really. I think, even the most prudent businessman when doing a business plan wouldn't have factored in a 12-month shutdown and not being able to leave your house. So yeah, it's been, there's nothing to compare it to, really, I think. I think for us, we're very much based on regional offices supporting local businesses. So we're a UK-based company, but we have regional offices. I think the first challenge for us was for the office-based staff, our underwriters, our security team, our credit controllers, our support staff who've been working in a local office all of a sudden have to work from home. For me, it wasn't too much of an adjustment because I've always kind of worked from home with my role. But I think the important step that we made at Advantedge is that we identified quite early in February that, look, this could be a thing. We may have to start working from home. So we started implementing sort of the technology, the telephone systems, the sort of communication things early. So when the lockdown was actually announced formally in March, our guys were already working from home. The technology thing has been challenging. We've been keeping in touch with Zoom and team calls and things. We've been able to respond to clients using the same phone numbers that they had previously, the same email addresses. For me, in my role, we're very much customer facing. So probably like yourself, we tend to go out and see a client. We visit the premises. We'll, build some rapport with them. And then from a traditional sales perspective, you would then print off legal documents. You'd send them to the address. They would sign them and then send them back. And you would do a face-to-face sort of know your customer, anti-money laundering thing. So all of that had to move online. So our quotes went to online quotes. We set up Zoom calls to sort of meet people and virtually go through the sort of stuff that they do. And then for legal documents, we've been able to email them. We've been getting people to sign them online, and we've been able to do our money laundering and know your customer requirements via Zoom or via Teams or via other means.
Thanks, Nick. Yeah, it's certainly been a big adjustment for everybody. And one of the other questions I wanted just to put to you is that obviously as a provider, you get some clients come direct to you, you get some clients coming to you via a broker.
Yeah.
What's the benefits for the client of dealing with a broker?
There's a few. I think firstly, I can really only talk about my company's products and features and benefits. I'm aware of some of the other products in the market, but I will only really be talking about my own company, what they do, the services they provide. With a broker, a good broker will have access to the whole of market. So they will have multiple funders that they talk to. And funders across all different lending sectors have different requirements. They have different ways of working. They have different pricing structures and risk profiles. So firstly, it's whole of market. The second thing, which I think is probably one of the most important at the moment, is the type of funding available. So the amount of finance providers now, it's bigger than I can remember it ever being in 10 years, with the rise of sort of fintechs and you've got the high street banks, you've got the independents, you've got investors. There are so many ways for businesses to borrow, and there are so many assets that you can use now to raise cash for your business. I think it can be a bit overwhelming. I think if you're a business owner, you maybe not borrowed before, or you've been to your bank and maybe been told no. There are so many options available that a good broker would sit down with you and say, look, what is it that you need? Most businesses start by saying, well, I need cash. They don't generally say, well, I need invoice finance, or I need this, or I need that. So I think what a broker can do, a good broker can sit down with a business and actually assess, look, what is it you need? let me have a look at your financials and see what you actually would qualify for. Go through the sort of personal circumstances of the directors and these bits and pieces. So you can start by getting the right funding in place, because I think we've both seen it where, some customers have taken finance which is just not suitable for the business, and within 3 to 6 months, it becomes clear that it's not. So I think going to a broker can give you a real advantage get the right type of funding, and then for the sort of whole of market. And for me, singing your praises a bit, Dave, is when I get information from you, I do get quite clear, concise and detailed information. You've been to see the client, you've got a relationship with them. You provide me with the financial information, the history, some of the person and what they're looking for, which makes my job a lot easier.
Brilliant. Thanks, Nick. Now, as we're now hopefully moving towards coming out of our third lockdown and towards the end of restrictions, can you just give us your sort of personal thoughts on the expectations on what's going to happen with cash flow funding in 2021 and beyond, as government support starts to taper off, and particularly in relation to the products you deal in?
Yeah, well, I think there will be a huge demand for cash and invoice finance. I think you've already mentioned there that the government support, I mean, that was unprecedented again, the bounce back loans, the CBIL loans. It was a great product launch, I think, by the government, but they are starting to taper away. A lot of those are starting to become repayable now. And for a lot of businesses, the last 12 or 18 months has been very challenging. For a majority of businesses, you've got staff on furlough who you need to make a decision: when do I bring them back? You will unfortunately probably see some business failures coming out of this, which may create some bad debts up and down the supply chain. Businesses may have used up a lot of their cash reserves over the last 12 months. They could have had to invest in making their offices COVID proof, PPE. And coming out of a situation like this can be quite dangerous, because do I invest now or do I wait? Are we going to have another lockdown? Plus you've got Brexit and all the other challenges that come along with that. So I think cash flow requirement and invoice financing particularly will be needed and be very useful. I think where invoice finance may have an advantage is we don't solely rely on the financial performance of the business for our lending decisions. Our lending decisions are mainly based around the audit trail, the order cycle, the invoice itself, the sort of debtors that you're dealing with, rather than the financial performance of the company. Because for most businesses I've been speaking to, the last 12 months has been very challenging, and that will reflect on their P&L. And traditional P&L based loans you may not qualify for now. So invoice finance is a good alternative to them.
Yeah, certainly a good point. And I think, as we all know, Nick, as a sort of supplementary question for you, more businesses tend to run into difficulties, challenges, and indeed sometimes, unfortunately, fail coming out of an economic dip than they do going in.
Yeah.
I think we'd be interested to know, if you've got a very, very good company that's had a very, very explainable downturn, that then unfortunately runs into a situation where it can no longer continue trading, but there is a salvageable business at the end of it that's of good quality with good products and good debtors. Is that something which invoice finance can help with?
Absolutely, yeah. So we can, if it's fundamentally sound business and the invoice cycle, order cycle, and the debtors are of good quality, we can help. And I think as well, with invoice finance, we tend to do 12-month contracts at a time, and then it rolls onto a notice period. So with a loan, traditionally it's 12 months, 24 months, 36 months, and there tends not to be any change to that. This is your repayment and this is what you have to pay. With invoice finance, it's 12 months. So for some clients, it can be a short-term cash boost until they get themselves back on their feet. It can be, oh look, I'm dealing with this one contract or this one client who's asking for extended payment terms. So we can be very flexible. We also don't require huge amounts of personal guarantees. We don't require the directors or shareholders of the business to have completely clean credit records. So we can be very flexible using the debtor book to fund the business.
Thanks, Nick. Now, obviously, you mentioned earlier there are many, many funders in the market now. There's
Yeah.
many cash flow funders, there's many invoice finance funders, many of which offer a great service, many of which offer great products, great prices. So I suppose my question, the question that the people watching this will be interested to ask is why would people choose to work with Advantedge Commercial Finance against one of your competitors, and what sets you apart from some of the other funders?
Yeah, okay. Well, I think I mentioned it earlier. We still very much believe in having a local presence for local business communities. I think the high street banks have become increasingly digitalized online platforms. You don't have as many sort of local business managers as you did in our day when we both worked for the high street bank. So we've set ourselves up that we have regional offices, so Southwest and South Wales, Midlands, Scotland, Northern England, Thames Valley. And within our offices, we have everything we need to process an application from start to finish. So we have underwriters, we have security teams, we have credit controllers, we have client managers servicing clients, and you have sales guys like me. So what that means is that we can act very independently. We have clients on our portfolios that are based in our local area. So one of the challenges can be with invoice finance is it's a dynamic product, because your debtor book is ever changing, your client base is ever changing. It's not a fixed point in time. So there are times when you need to have a quick response in order to raise the cash that you need. So having a local presence, having local decision makers empowered to make lending decisions means that we can move very quickly to respond to new clients or existing clients' needs. So I think that's one of our major selling points. The other one is our client service. We pride ourselves on our high level customer service. Our client managers are experienced, and we ensure they have a low portfolio of clients. So they have maybe 30 to 40 as a maximum, which means that they can respond to clients' needs. They're not overworked. They're not struggling to get back to people. You still have direct contact with us, which I know for some people frustrates them with their banks. They can pick up the phone to us still. We can still get back to them very quickly. So our speed of response is something we can, from new clients to existing clients. Also, I would say our risk appetite. We will look at pretty much any business, regardless of its circumstances. We don't turn things down without first looking at them. We can work with startup businesses, for instance. We can work with maybe clients who are struggling financially, especially over the last 12 months. We can look at clients who may have some HMRC arrears, or it may even be that the business has failed and they're looking to restart a new business. So we have a risk appetite, and I think that's going to be especially useful for the next 12 months.
I think, in fairness, the service element and the localized element is something that people very much are sort of switching back onto as we come out of pandemic. So we said the last 12 months have been difficult and challenging. I think the next 12 months, we're all hoping, praying, are going to be a lot easier. But I think the realism is hitting home with businesses that it's going to be tough for a period of time.
Yeah.
So what's your advice for the sort of SME businesses that, as you say, you deal with locally, that you might want to deal with locally? What's your advice for them as we start to come out and start to trade and start to go through the next few years? What's your sort of top tips for these businesses?
Well, I think number one, if there was ever a time to do a business plan, now is the time to do a business plan. I mean, a lot of businesses don't do them, and I understand why. You can get very busy, especially in owner managed businesses when you're really running the day to day. But I think if there's ever a time to actually do some forecasting or do an actual business plan for the next 12 months, now is the time. Because like you said, we're coming out of a pretty unprecedented situation. So there will be challenges, but there will also be opportunities. There will be your competitors who may not be around anymore. There may be new markets that open up on the back of this. There'll be, hopefully some enthusiasm from the British public who've been locked in their homes for the last 12 months. So this is a really good time to plan. And part of that business planning, I would put forecasting in specifically in terms of cash flows. Now, whether you can do that yourself or not, maybe seek advice from your accountant. But if you can look at the next 12 months, especially if you've got furloughed staff coming back, if you've got reduced rents that are going to be increased, or you've got a HMRC VAT quarter that was deferred and now is now due. If you can forecast your cash position where possible, and for people like yourself and me, Dave, it's a lot easier to work with a business that says, look, I've got this cash flow need coming up 4 weeks time, 5 weeks time, 6 weeks time. We can respond quickly, but it's easier to deal with a business that's got a cash flow requirement that they're aware of coming up than something that just comes out of nowhere, which can happen. I would also say that if you think that you may need finance, even if you may not end up using it, there's no harm in coming to yourself or someone like me to go, hey, if I wanted to borrow in a couple of months' time, what would I be able to borrow? What sort of products do you think would work for me? And then, like for us, for instance, we can go all the way to an underwritten offer with no charge at all to the client. And I think we're both quite happy to sit down and say, hey, this is what we would look to do for you. This is how much it would cost. This is the sort of requirement we would have from you as a business owner. And we can even, like I said, make an underwritten offer that you can keep on file, and 2 or 3 months down the line, when that cash flow need comes up, at least you've already been through that exercise. You may have 1 or 2 quotes already outstanding. So I think if you can plan, if you can do some forecasting, and if you've got some lending requirements that you think may be coming up, start to explore them early. I think that will help businesses. Don't be afraid to ask for advice and support from your professionals, from your accountants, from people like yourself, Dave, from people like me even. If you've got something that you want to query, don't be afraid to ask. And I think we've all had to embrace technology over the last 12 months. So I think for a lot of business owners, there's still some reluctance to embrace some of the technology, especially around the social media. And I don't blame people, because it can be a bit of a minefield and it can be quite hard to work out, but there's plenty of people that can offer you help and advice completely free of charge. So yeah, if you can embrace the technology, I think that would help.
Brilliant. Thanks, Nick.